So allow me to read the question. It says, H Limited is the parent entity of a group of companies with two subsidiaries, S Limited and R Limited. Both subsidiaries have been owned for a number of years. The following statement of profit or loss and other comprehensive income relates to the group of companies. So we have H, S, and R. Let's go to the additional information. Number one, on 1st May 2017, H acquired 75% of the ordinary shares of S Limited, a public limited entity. The purchase consideration was cash of shillings 560 million, and the fair value of the identifiable net assets of S was shillings 400 million as at that date. The fair value of the non-controlling interest in S as at the date of acquisition was shillings 240 million. H Limited wishes to use the full goodwill method for all acquisitions. The ordinary share capital and retained profits of S Limited as at the acquisition date were shillings 100 million and shillings 200 million respectively, and there were no other reserves. The excess of the fair value of the identifiable net assets at acquisition is due to an increase in fair value of plant, which is depreciated on a straight line basis and have a 5-year remaining life as at the date of acquisition. H Limited had acquired 80% of ordinary shares of R on 1st May 2016. The purchase consideration was cash of shilling 600 million. R Limited identifiable net assets had a fair value of shillings 550 million, which was equal to their carrying amounts. The non-controlling interest in R Limited had a fair value of shillings 150 million at the date of acquisition. That is fine. On 1st November 2019, H Limited disposed of 30% of the ordinary shares of R Limited for a consideration of shillings 375 million. R Limited's identifiable net assets were shillings 675 million, and the non-controlling interest of R Limited had a carrying value of shillings 175 million at the date of disposal. The remaining equity interest in R Limited held by H had a fair value of shillings 575 million. Fine. After disposal, H would exercise joint control over R. So they were having 80, they disposed 30. So remaining 50. So the 50 is the joint control. The profit and loss of R are deemed to accrue evenly over the year. H Limited sold inventory to S Limited and R Limited at a price of 150 million and 45 million respectively. In the month of October 2019, H Limited sells goods. In the month of 2019, fine. H Limited sells goods at a gross profit margin of 20% to group companies and third parties. At the year end, half of the inventory sold to S remained unsold, but the entire inventory sold to R had been transferred to third parties. So there is no unrealized profit in R. Goodwill arising on acquisition has been tested for impairment annually, and as at 30th April 2019, goodwill on acquisition of S had reduced in value by 15%, and as 30th April 2020 had lost a further 5% of the original value. No impairment had occurred in respect of goodwill on acquisition of R and the interest in R. No problem. Required gain or loss arising on disposal of R to be presented in the consolidated statement of profit or loss and other comprehensive income, then consolidated statement of profit or loss and other comprehensive income for the year ended at. Correct. So they want gain or loss, which is consolidated. If you remember, we did gain or loss in two ways. There is gain or loss for consolidated and in the individual financial statements. So let's work out this. Before we go to gain or loss on disposal, allow us to calculate goodwill. It will not allow us to move. So let's just calculate goodwill first. So let's calculate goodwill. Let's calculate goodwill. Let's calculate goodwill. Goodwill, we want to calculate in S and in R. So shillings are in millions. So purchase consideration can you check when S was acquired? So for S, go to note 1. I want us to make the class interactive. So how much was the purchase consideration in note 1 in regards to S, which you can see with your own eyes? $560. The purchase consideration correct. This is $560. Check R. When R was acquired in note 2. How much was the purchase consideration for R? 600, correct. Then you add fair value of noisemakers. Fair value of NCI was mentioned in note number 2. Really? No. Was mentioned where? Hata kuna mambo ya fair value hapa ambayo nimetoa. Which 240 for S, which note? I'm trying to trace, my eyes cannot see. Note 1. Check note 1. So S was 240. The fair value of non-controlling, yes. This is 240. Then check R. Then R, I can go to note 2. The non-controlling interest in R was 150, correct? So can you add? This is 800. This is 750. Can you call it A? Call it A. Very good. Then you less net assets. What are net assets? Less net assets. Net assets, even I suspect we were given. Net assets in note 1, they said, and I read, on this H acquired 75% of S, a public limited entity. The purchase consideration was 560, and the fair value of the identifiable net assets of S was 400 as at that date. So already when you're given net asset, that is what you take. Note 2, H had acquired 80% of R. Purchase consideration 600. R identifiable net assets and a fair value of 550. Call this one B. So subtract. Apana waste time hapa. So goodwill. Don't close this one. Goodwill is A minus B. So this is 400. This is 200. Then subject this to note number 5. Subject this to note 5. Subject this to note 5. So note 5. Goodwill arising on acquisition has been tested for impairment annually. And by 30th April 2019, please remember that we are working in 2020. So by 2019, goodwill on acquisition of S had reduced in value by 15%. So that is called accumulated depreciation, impairment. Accumulated impairment. Accumulated impairment is the impairment which took place before this current financial period. So you take 15% of 400. What is 15% of 400? 60. So balance 340. Balance is 340. Continue reading. And as at 30th April 2020, our current year had lost a further 5% of the original value. So less impairment for the year. So for the year is what will go to P&L. 5%, not of the balance, but of the original value. We have said original value. So times 400. 5% of 400 is 20. So net goodwill, which will go to the balance sheet, should be 320. Very good. Then this one, they said there was no impairment. Who has a question up to that point? Any question? Who has a question up to that point? There is no question. So now we can, there's something I want us to do before we go to the game again. Read note 1, check note 1. Read note 1. So in note 1, they are saying, if you read, they are saying that The purchase consideration was 560. Will you continue reading? There's something which is not adding up here. So that issue is resolved. Yes, that is okay now. Sorry, so for that note one, it was a network problem. So that note one, on first that, H acquired 75% of the ordinary shares of S, a public limited entity. The purchase consideration was 560, and the fair value of the net assets, your attention is being drawn from there now. The fair value of the identified net assets of S was 400 as at that date. The fair value of NCI was 240. Hedge wishes to use that, no problem. The ordinary share capital and retained profits and acquisition were 100 and 200 respectively, and there were no any other reserve. The excess of the fair value of the identified net assets at acquisition is due to an increase in fair value of plant. So there is revaluation. There is revaluation which they don't want to. Hawataki kuambia vizuri, wanachukua long way. So you say net assets on acquisition of S Limited, have this working. You know, net assets is the sum of ordinary share premium, retained earnings, those ones. So ordinary share capital, they are saying it was, check paragraph 2 of note 1. Ordinary was 100, and the retained earnings was 200. was 200. Aye. So when you add these two, they said there was any other reserve. So this is 300. But when you skip one line, reported net assets, they have reported that net assets was 400. Then they are saying the increase in net assets is due to fair value of the plant. That is revaluation. So they never wanted to talk well on that revaluation. That is the balancing figure. There was revaluation of 100. Na hiyo kitu wanapenda sana. When they don't want to tell you revaluation straight, they give you the net assets, then they give you these other net assets. So you take the total which they are reporting minus this others to get revaluation. Please mark that keenly. I hope that is also very clear. I hope that is also very clear to my students. So now, let's calculate the gain or loss on disposal. So right there, from one of the question, gain stroke loss on disposal. Disposal S limited. S limited. Have that. So shillings are in millions. So proceeds, you start with proceeds. Proceeds on disposal. I want you to tell me the proceeds. How much were the proceeds? Somebody to tell me how much? What was the proceeds on disposal of R? How much the proceeds on disposal of R? $600, Alan. So R was disposed in note number 3. Check note number 3. On this, hedge disposed 30% shares of R for a consideration of 375. Alan, you are lying to me. Broad daylight. It was disposed for 375. Proceeds is the amount you get when you dispose. Then continue reading. R limited identifiable net assets was 675 on that date, and the non-controlling interest was 175 at the same date. The remaining equity interest in R held by hedge had a fair value of 575. So you add fair value of investment or net assets retained. So whatever you never disposed, you add back. It's also like income in quotes. So that is 575. So this is 950. 950. Then you less. I gave you the format yesterday, and even we did a question. You less unimpaired goodwill. disposed. Unimpaired goodwill disposed. So unimpaired goodwill disposed, unimpaired goodwill disposed is this one here. This one. The goodwill which was in R was 200. So come and subtract. It had not been impaired, so just put it here. 200. Then you also less net assets. Net assets disposed. So net assets, check the net assets on the date of disposal. What was the net assets of that company on the date of disposal? Go back to that note number 3. Hedge 30% of R for a consideration of 375. R Limited's identified net assets was 675. Was 675. Be there. And the non-controlling interest was 175. So Nilo, you are it was 675. Net assets on the date of disposal was 675. But on the same date, NCI was entitled to 175. So this value, unlike the question we did, here they are saying, read that note 3 keenly. On first, this hedge disposed 30% of R for a consideration of 375. R Limited's identified net assets was 675 million. The non-controlling interest of R had a carrying value of 175 at the date of disposal. So this one here comes to 875, but minority NCI on disposal, they were also requesting for 175. So of what was attributable to the parent, minority was going with 175. So this is 700. So there is a gain. So gain on disposal is this minus this, which is 250. Full stop. That is 250. Wow. That is it. Next, we are required to prepare consolidated statement of profit and loss and other comprehensive income. Don't try to step there until you analyze the period perfectly. When it comes to P&L, please make sure you analyze P&L properly. Otherwise, you can mess up terribly, terribly. So I hope people are done with this. So before we go to P&L, kindly let us check the financial period. How is it moving? Very important for us. So financial period, you check when it is ending. When it is ending, it is ending on 30th April 2020. 30th April 2020. It means it must start. It must start when? When should it start? When should that financial year start? Ladies and gentlemen, when should it start? Adam, 1st May 2019. 1st May, thank you so much. So this one, you check tomorrow, then you backdate. So 1st May 2019. Correct. Can you check when S was acquired? When did they acquire S? Kindly check. S, check note 1. On 1st May 2017, that was even before this year. So in respect to this year, S is going to be full year subsidiary. Full year subsidiary. Alright. Let's check R. When was R disposed? You know, even in R, we were controlling 80. Then after disposal, we are controlling 50. They removed 30 and remained with 50%. Remember, 50% is a joint venture. Joint venture, we don't consolidate for them. So, check keenly. Note number 2. H had acquired 80% of R in 2016. So R here ilikuwa acquired kitambo. So the main concern is when was it disposed? Note 3. On 1st November 2019, H disposed 30 of R for this. So this took place on 1st November, somewhere here, 2019. So from here to here, it was a subsidiary. It was a subsidiary where parent was controlling 80. After disposal, they moved 30. Parent remained with 50. So it became a JV, 50%. So for 50, we don't consolidate for joint ventures. Joint ventures and associates are not consolidated for. So when we are preparing P&L, I will only concentrate for this period from here to here. So how many months? My good students, how many months are those? Unahesabu kwa vidole hata kwa mtihani. Hakuna kuhesabu kwa roho. So Alan is saying 9 months. Said is saying 6 months. Which is which? Those are 6 months. Where are you getting 9? Oma is typing error. So from here to here is 6 months. So R, 6 months, subsidiary, 6 months, JV. Thank you. This is the heartbeat of the question, where the question lies. So how will you approach consolidation? So, Adan, I type upside down. Other numbers, Alan. Oh, by the way, it can happen. So how will you consolidate for this group? So for this group, for P&L, you will take H, this H. Yes, this H. H plus S in full plus R, but R 6/12. Income and expenses of R you only consider for the period from here to here. Correct. How will we go about the balance sheet? Consolidated statement of financial position. Though this one was not asked, but what if this one was to be done? You take H plus S, full stop. R will not feature there. We'll only take investment in associate once. It will appear once, other than current assets. So balance sheet, you only take these two. When a company, at the end of the year, it is an associate or a joint venture, you don't bring it in consolidation. That's it. That's it. That is it. That is it. So please, once you analyze this one, you can even tell the invigilator, I want to stretch outside here, I come back. Because when you come back, that P&L can take you maximum 10 minutes. You get the getables, what someone should get, those other ones you don't care about. Once you have this, it is sufficient. This is where the question is here. Not those additions and the rest. God forbid, if someone, let's say that, you know, there are countries, not in Kenya, there are countries where people steal the exam. If someone was to steal the exam, now I'm assuming I'm the one stealing for you. In this one here, I only tell you this is sufficient. That for P&L, take HS, this one in a portion, this one you take like this. That is sufficient, not doing the actual thing. So this is where the question lies. A question goes for 36 minutes. I even recommend here, take even 7 minutes to analyze and you'll be very sure. Very, very sure. Then consolidation will move very fast. So let's kick off the consolidation. So right there, H group, unless someone has a question or a concern. Kama kuna swali unauliza, kuna watu wanachokoza watu hapo kwa group. So wanafanya mtu akose kuuliza swali. So you just ask your own question. So right H group, consolidated statement of P&L. So P group, not P, why am I talking of P? H group, and other comprehensive income. So shillings are in millions. Shillings are in millions. So revenue will be 4275 plus 2515 plus 1730 times 6/12 minus intergroup sales. Intergroup sales was mentioned in note number, which one, students? Note number 4. Check note 4, there were 2 of them. In note 4, there was sale to S and R, price of 150 and 45. Combine the two, 195. Yes, those two. Subtract. You can subtract them independently as 150, then 45, or you combine, no problem. How much total consolidated revenue? How much is the consolidated revenue? Someone? 7460. Someone to confirm? Correct. Confirm. Cost of sales. Cost of sales 2735 plus 1445 plus 1010, 1010 6/12. I want to ask a very, let me call it a very stupid question. Nora, Dulo, can you just tell me why are we multiplying by 6/12? So hiyo ni swali ya Nora peke yake, mtu asiingilie. Nora, why am I multiplying by 6/12? Say to the best of your honesty. Nora, why 6/12? We apportion according to the period. Which period? We take the period when, you multiply your sentence, we apportion for the period when, yes, that one is okay, according to the period. When? Which period? Which period are we considering? Before it became a joint venture. Very good. That is it. So we are very much together because that was a random check. Yeah, you take when it was a subsidiary before it becomes a joint venture or associate. Correct. Minus, again, you subtract the intergroup sales. Whatever you subtracted here, come and subtract it here. Intergroup sale is also cost both sides, but you add unrealized profit to this to reduce it. So add unrealized profit to this to reduce it to cost. So unrealized profit, I want my students to, your attention is drawn in number 4. Number 4. So in note 4, in note number 4, so in note 4, what is that? In note number 4, you can be able to see them saying that what percentage remained? At the end of the year, half of the inventory sold to S remained unsold. Half remained unsold. So it means that the unrealized profit, UPI, will be a half of the goods which have been sold. The goods that have been sold to S. goods that have been sold to S. So to S, the parent has sold goods worth 150. So a half of 150 times the profit margin. Profit margin was 20%. So give me that figure. Can you calculate and tell me how much? Tell me how much that figure is. Tell me how much? $15, thank you. So the unrealized profit was 15. The other side, there is no unrealized profit. They said they sold everything. So add back, it is 15. People are saying 15? Yes. It's 15. So plus 15. But the other one, for the 45, they said those people sold to third party. So there is nothing we are considering. Then there was depreciation. Go back to the last bit of note 1. Note 1, paragraph 2. They are saying the excess of the fair value. The excess of the fair value was that depreciation issue. The revaluation, sorry. Revaluation was how much, if you can recall, I've deleted. We got how much for revaluation? How much was for revaluation? Yeah, it was 100. Then they are saying that revaluation is being depreciated on a straight line basis over 5 years. So there is depreciation of 100 divided by 5 years. So every year they are depreciating 20. They are depreciating 20. So that 20 you classify it under cost of sales. Depreciation is classified under cost of sales unless otherwise. So how much? Give me the consolidated cost of sales. Consolidated cost of sales. People are saying 45, 25. 45, 25. Subtract. So gross profit will be how much? Gross profit will be how much? 29.35. Thank you. Before I go to distribution, there is gain on disposal of R Limited. When parents disposed their shareholdings in R, we got a gain. How much was the gain? How much was the gain? The gain 250. So that 250 is an income which you should consider there. Then you should not ignore joint venture entirely. You must bring the profit after tax in joint venture here. So you come and say share of JV's PAT, profit after tax in joint venture, even associates, you bring them here. After gross profit, you share their profit here. This is always a free tip. So the parent will take 50%. Go to the P&L and check the profit immediately after tax. R is the one which became a joint venture. So what was the profit of R immediately after tax, which you can be able to see? How much? 380, correct. But 380 is a profit for the whole year. It was a JV only for 6 months. Give me the answer. Give me the answer. How much? 95. Lakini hii class mnanimotivate sana. Are you sure? Are you going to record for me 100% pass in FR? Because the motivation is very high. People are seeing figures even before I see them. Are you promising 100% pass in FR? Adam, you're saying God willing. Why is Thomas not saying anything? So, correct. Then now go back to this one here. Distribution. Yes, I'm also praying that you pass because kuna watu hata wako na wivu wananiuliza kwani hiyo class ni nini wanakupea every time, because you have also shown commitment, so I also have to try. So distribution, we have 305 plus 195 plus 90 for 6 months. $545. Then there is a group of students. Wao hakuna kitu ya bracket. Hata kama ni expense inaachwa hivyo. Hiyo inaweza kurudisha fellowship. Make sure expenses are bracketed. Next, admin. Admin 370 plus 235 plus 126/12 plus, what do we normally classify in administrative for group purposes? What do we classify in administrative? Impairment, correct. So how much was impairment for this year? There was accumulated and there was one for this year. So you bring for the year, not accumulated. So can you check how much was impairment for the current year? $20. So, all right, indicate in your books 20 impairment. Can you give me the entire thing? I'm being given 685. What are you for the operating whatever? Give me finance costs. Don't waste time where time is not supposed to be wasted with unnecessary issues. Finance cost. Finance cost is 45 plus 40 plus 30. 6/12. This is 15. 15 plus 45 is 60, 100. I hope I'm accurate. So give me profit before tax. Give us profit before taxation. Profit before tax. $19.50. Income tax. Income tax. 160 plus 120 plus 100. This is, I don't know, 330. This is 280 plus 50. Yes, 330. So PAT, you can give me PAT. That is 20, 16. How much? 1620, yes. Unaifunga hapo, sure? Like that. Usifunge, kuna other comprehensive, sorry. We are continuing. Other comprehensive income. Other comprehensive income. Other comprehensive income. So other comprehensive income, we have gain on property revaluation. You just write gain on revaluation. Gain on revaluation, 150 plus 80 to 30. Therefore, total comprehensive income is how much? That is 1850. Now we must share. We want to share the profits. But mpaka hapo hiyo swali ushapita kitambo. Provided you know the 6/12 issue, you have passed. So write for me down there, you just proceed. You say profit after tax attributable to NCI, then holding company. So profit after tax, you will share. What are you sharing? You are sharing this. Hey, check this. You are sharing this one, the PAT 1620, this one. So you say here in total, I'm going to share 1620. Then down there you say total comprehensive income to NCI holding company. Then the story will end there. Total comprehensive is this one here, 1850, the total. So you tell us here, 1850, like that. Alright, so now we want the PAT, which is going to noisemakers, NCI. That one we must do our working outside here. So say NCI's PAT share. So in S and in R. R 6/12. So these people, they share profit after tax in the subsidiary. They don't take the profit after tax from the parent. So PAT of subsidiaries. So check in the question. Check in the question, in the P&L. PAT of S is how much? Somebody? PAT of S. I just want to check whether we are in the same boat. Yes. 480. 480. Then for R is 380, but 380 will not give them in full. 6/12. So 190. Because we are taking 6/12. Very good. Then the obvious. You know the obvious? Obvious UPI. But check who sold to who. You only subtract UPI if the subsidiary is the one selling. In this case, all the sales came from parent. So the subsidiary's profit is never, it will not be affected with the umbrella's profit. It only affects subsidiary if subsidiary is the one who sold. So X. There was depreciation. Depreciation affects, it was in the books of S. It was 20. It was in S. There was impairment for the year. Impairment loss for the year. Why am I subtracting? It was full method. NCI participated in goodwill computation. So toa hiyo 20. Nothing. Kilizo tungo na angalianga. You check depreciation, impairment, and UPI. UPI was downstream, so nothing. Adjusted PAT, this is for 20. No, for 60. So therefore, noisemakers, NCI will take, in S, parent was controlling 75. So minority, 25%. This side, for the first 6 months before disposal, parent was, NCI controls 20 because parent was having 80. So take 25 of this, 20 of that. Give me those two answers. So the answers have been given as 110 and 38. $110 and 38. So total 110 plus 38 is 148. So minority goes with 148 of the profits. Alright, so you go up there. PAT 148. So parent takes the difference, this minus this. So parent takes 1620 minus 148. How much? So parent goes with 1472. Thank you. Total comprehensive. Total comprehensive, let me take you back here to P&L down up there. Total comprehensive down here. How did we get the total comprehensive? We added PAT plus revaluation. So the same thing should happen there. To get the total comprehensive to minority, take the PAT. In PAT, they have gotten 148 plus revaluation. Revaluation is here. There is 150 plus 80. Don't give them 150. 150 belongs to parent. What they need to take the percentage is 80 in the subsidiary. Here, they should not bring their legs here. They are only here. This is what they share with the parent. So you come and say 148 plus 25% of revaluation. That is what goes to the minority. That 8 is what they share with the parent. How much? How much? How much? How much? How much? $168. So to get what goes to the holding, take this minus 168. Then I will confirm. Take this minus that. $16.82. We can even confirm to get total comprehensive to the parent, take what they got in PAT, which is 1472 plus revaluation. Revaluation, the 150, they will take in full. Then the 80, they take 75. Can you confirm if that is true? The 80 they share with minority, they take 75, revaluation in full, then the PAT up there. Can you confirm whether it is bringing the same thing you are giving me? Confirm. Confirm, confirm. Yes, then that is okay. And that is the end of that question. So any student, that is how many marks? 12. Any student who interpreted that question well should get the following ticks. Should get, by the time we enter for exam, provided you have done your correct interpretation, you should get this, you should get this, you should get this, you should get this, you should get this. Those are the ticks which anybody who interpreted that question na ayuko strong sana kwa group anafaa apate hizi 1 2 3 4 5. There is none which is moving very fast. Oh, tax. There is this one. 1, 2, 3, 4, 5, 6. And I tell you for a fact, those are the tick students will get. Those people will try to mark 12 times 1 itakata. So itabidi warudi kwa 6 times 2 ndio ifike 12. Now, because 20% of non-alliance will not even do group accounting. Wale wanatokanga mtihani mapema, mbaye waona. Hawatafanya group. So for people to pass, they will moderate. It will finally be 6 times 2. So if you interpret properly, because when 20% disappear, the remaining 80, of the 80, again, 20% will not interpret the question properly. So the remaining who are interpreting, sasa kuna ile hapo na hapo. So ndio watu wapite, these are the things which people should get. So ukishapata hizi mpita hiyo swali. Just concentrate on interpretation. Group is all about interpretation. You interpret it perfectly, you get everything. Now, there's a question which I don't want us to solve in class, though I'll share with you solution on Monday or Tuesday latest, but I want us to discuss something on it. I want to leave it as assignment, then I'll share with you the solution. I'll go and work, then share, but I want us to discuss it before we wind up. Which question was this? 2017. Ebu, let's go to 2017 so that it doesn't bother me if it comes in exam. 2017, there's something I want us to interpret there so that my heart can be at peace. December 2017. December 2017. December 2017, where are you? That is 2016. December 2017. I'm there. Page 83. So in that question, allow me to read, there's something I want us to clarify with you then, fine. So even if I give you the solution, you'll be able to understand. The following statement of comprehensive income relates to W and its investee companies S and F for the year ended that, as your eyes is capable of seeing. Additional information, W bought 60% holding equity shares in S in 2016. The purchase consideration was agreed at 900, of which 600 was paid in cash. The balance was satisfied by immediate issue of 5% bond at par. You 5% bond, forget about it. Forget about that. Provided they have given you the purchase consideration, you work with that. This is the story of S limited net assets at a fair value of 14. In fact, goodwill, you can work very fast from that stage. Net assets already have been given. As at 1st April 2016, represented by equity share capital of 775 and retained earnings of that. It was decided to apply the proportion of net asset method to calculate goodwill and acquisition. No impairment loss on goodwill. W, so let's get your story. W sold its entire. Please underline the word entire. Underline the word entire. W sold its entire 60% equity holdings in S. Yote, waliuza yote. On 31st March 2017 for 1150 million in cash. No entry had been made to reflect this transaction. Fine. W owned 90% of equity of F since incorporation. No goodwill arose on acquisition. There were no other. Fine. During the year, W sold goods to F for 15. You remember realized profit. You are very good in that. Number 5, on 1st March, F declared dividends or dividends in Ashida. All expenses and gains are assumed to accrue fine. Now, required. 1, the gain or loss on disposal. When they just, if this is plain, disposal of shares in S, just do the consolidated, the one for consolidated, then consolidated statement of comprehensive. So I want us to analyze the period. How is the period moving? The year is ending on 31st March 2017. This one must start on 1st April 2016. Correct. When did they acquire S? Check note 1. W bought 60% holdings in S on 1st April 2016. Here, immediate at the start. Then in note 2, when did they dispose? W sold its entire 60% holding in S on 31st March 2017. Here. It was acquired here, then disposed at the end. What about W? What about F? Note 3. W owned 90% equity of F since incorporation, long time ago, so there's no problem. So how are we going to consolidate here? S has been disposed of at the end of the year. So how are we going to do P&L? What do you think? Somebody? The addition, how are we going to add P&L? Can someone try? Hiyo tu tukishapata tumemaliza. How are we going to go through P&L? So Adam, W full year, of course W must be full year because it's the parent. So hapo umetuenjoy. The main concern lies in these others. Parent must always be full. All 3 full year, Felix, correct. All the 3. So there is, when a subsidiary is disposed at the end, then income and expenses all year, even assets. Because those of you who are doing auditing, there is that which you call adjusting events and repos to whatever. So at the balance sheet, those assets were there. So there is nothing to be apportioned as far as income statement and balance sheet is concerned. So W plus S plus F, yes, so that is true. You add all of them without apportionment. It was disposed at the end of the year, so you don't time apportion. So I was just cautious if they bring in exam, wewe umezoea ati mwalimu alisema to analyze. You can analyze unajikuta uko mwisho wa mwaka. What happens? You take in full. I'm going to provide you with this solution so that you can do it at your free time. Thank you so much for your time. Let me go and rest. I'm also very, very tired. We meet at 7:30 a.m. for segmental reporting. Thank you.